welcome back to part 2 of our look at the 2016 past paper. Let us now go right into it. Item 31 refers to the following extract from the trading account. And we are provided with opening inventory, sales, purchases, and closing inventory. We're asked to determine what is the gross profit. So what should we do? We're going to add the opening inventory, that is 200, with the purchases, that 500, that will be 7. When we add that, subtract 300 from the 700 is going to give us 400. That will be our cost of goods sold. Subtract the 400 from this 900, which is the sales, and we'll get the gross profit. So what is the gross profit then? $500, that is C. Item 32, when a trial balance fails to agree. When a trial balance fails to agree, the difference is entered in and our answer is B, the suspense account. 33, how does an increase in bad debt affect the sole trader's financial statement? How does the increase in bad debt affect the sole trader's financial statement? And we're saying it will decrease the net profit, right? It will decrease the net profit, so C is the appropriate answer. Question 34, a debt is considered a bad debt if the debtor fails to pay. And so B is our appropriate answer. Now, item 35 gives us the insurance account and asks of us what is the amount of insurance prepaid at the end of the year. What is the amount of insurance prepaid at the end of the year? Now, first of all, we are saying that it would be A, $600. What is the amount of insurance prepaid at the end of the year? Would be $600. All right. Now the question is, how did we arrive at this $600? Whatever the CD balance is, that's what the BD balance would be. Okay. So balance CD of $600. Okay. Item 36 is telling us that M. Brown wishes to increase his provision for bad debt from 8% to 10%. Accounts receivable, yes, at the end of the year totaled $10,000, whilst the balance on the provision for bad debt account is presently $800. Which of the following would be the correct entry to record the provision for the year? Now, it is moving the percentage up from 8%, yes, to 10%. So we will find 10% of the $10,000. 10% of the $10,000 then would be $1,000. So it will be increasing by $200. Yes? It will be increasing. The provision for bad debt will be increasing by $200. Right? So then the answer that is most appropriate then will be D. Right? We want to debit the profit and losses 200 and credit provision for bad debt with 200. So D would be our most appropriate answer. Item 37 says, refers to the information which is extracted from the cash book of Danny Dairy. All right. So we're looking at the balance per cash book, total unpresented check, bank lodgements not entered on bank statement. So this question is dealing with bank reconciliation. This is the area it has been addressing. Now, we're asked, what is the balance as per bank statement? What should we do? We're going to be adding unpresented check with the balance as per cash book. Yes, and that will give us $680. Then we're going to subtract the $150 from it. And our difference is going to be D, 530. So our most appropriate answer for this question is D, 530. So question 38 is D. Question 38 is D, sharing of profit and losses. Question 39 refers to the following data: debtors with credit balance of $1,100, creditors with debit balance of $700, and amount received recorded as an overpayment in error is $20. The amount to be shown as a set-off in the debtor's ledger control amount is, and our answer is $200. All right, so $200 is the appropriate response. Question 40. Which of the following items can be used to adjust the cash book balance before preparing a bank reconciliation statement? Our answer is B, direct transfers and dishonored checks. So our answer is B. Item 41 says, on the 1st of June, P. Shark, a sole proprietor, owed creditors $4,300. During the month, he paid $13,100 by check, and at the end of the month, his balance owing was $2,700. Cash purchases for the month are $3,500. All right. Now, what is P. Shark's total purchases for the month? How do we go about this? All right. So he had an opening amount of $4,300. So this, it has to do with a purchases ledger control account. So on the credit side, we would have the opening balance of $4,300. We would add the amount that it says that during the month he paid $13,100 by check. So that will be debited. And it says that the month, at the end of the month, his balance owing is $2,700. All right. And that is a CD balance. And the cash purchases is $3,500. Let's look at how it looks. Okay, so this is how it will look now, the creditors control to find the purchases. We would debit the bank amount paid by bank, amount paid by cash, the balance, closing balance of $2,700. Of course, our opening balance on the credit side of $4,300. We add and subtract and we'll get the $15,000. So the answer will be C, $15,000. Let's go to question 42. Question 42 says, Mr. Jones' business began the month with an overdraft of what now? $1,200. During the month, total deposits were $2,000 and total payments were $600. What is the cash book balance at the end of the month? So how do we get the answer for this question? And an overdraft of $1,200, and Mr. Jones would have put into the bank $2,000. So $2,000 subtracted from the 1,000, yes, will bring back the account into a normal balance of $800. And then now he make a payment, right? He made a payment of $600, so it reducing the amount that he would have in his bank balance. So subtract the 600 from the 800 and we'll get 200. So our answer for the question is A. He would have a debit balance of $200. Let's go to question 43. Question 43 said, Mr. Smith does not keep proper records. He began his business with 10,000. Is that 10,000? Yes, in its bank account. He uses the vehicle and building worth 6,000 and 15,000 respectively as part of his business. Customers owe him $4,000. He withdraw $1,500 for personal use and owes creditors $2,000. And they're asking us what is the closing capital of the business. All right. So far, this information is seeking a balance sheet concept. Yeah, we're going to have to do a balance sheet and then work backwards to get the capital. All right, let's do that. Okay, so how would we get the answer for this question? We have to identify what would be his asset at start. What would be the value of his asset at start, or the value of his capital? Because the capital will be equal to his assets. All right. So he introduced to the business $10,000. So we're going to add that plus he used the vehicle and building as a part of his business, so that we're going to add as well. So bank, vehicle, and building are going to be added together. That will be the total amount of his assets at start, and it will equal to his capital as well. So his opening capital will be $31,000. His opening capital will be $31,000. Now, two very important things that will affect him now is that he owed some customers owed him $4,000, yes, and he has creditors of $2,000. So we subtract the $2,000 from the current asset, current liabilities of the creditors subtracted from the current asset, which is the $4,000, to give us $2,000. When we do that, we get the working capital. We add that working capital figure to his total beginning asset, which is $31,000, and that now will give us $33,000. So our answer would be 33. D is the appropriate answer. Item 44. Item 44 says, at the end of the year, the capital of a business is $33,000. At the beginning of the year, the capital is $28,000. During the year, he withdrew $2,000 for his personal use. What is the net profit? What we'll do here is going to be working backwards. So we'll start from his closing capital. And it says that the capital at the end of the year is $33,000. So we're going to go backwards. Add what we used to subtract and subtract what we used to add. So we're going to add the joins to the closing capital, or the closing capital amount, which would be $35,000. Then we subtract the $28,000, which would normally be added. And then we'll get an answer of $7,000. So the answer is B, $7,000. So we're now at item 45, which refers to the following information. In opening inventory figure is $1,500. Purchases during the month is $1,200. Cost of goods sold is $1,400. The question we're asked is, what is the inventory at the end of January. What should we do in this case? We are going to be working backwards. Yes? So we know it is $1,400. We add what we used to subtract and subtract what we used to add. So in order to get the closing inventory, we would normally will add opening inventory plus purchases. That is going to be $2,700. Yes? And we would normally subtract the closing inventory to get the cost of goods sold. So we're going to do the opposite now. What we're going to do is to subtract the cost of goods sold from the total we have received here. So the 2,700. So we take 1,400 from the 2,700, and our answer should be 1,300. So the answer is D. So let me back up a bit so that you get it. One more time. In the normal circumstances in the income statement or the trading profit and loss account, we're going to add the opening inventory with the purchases. When we add that figure, we're going to get 2,700. We would normally subtract the closing inventory, and after subtracting the closing inventory, we would have gotten the cost of goods sold. So if we subtract closing stock from the sum received, that is the net purchases, yes, or the purchases plus the opening inventory, yes, the opposite is going to be done. So we just subtract the 1,400 from that total we get, which is the 2,700, and it would give us the closing stock. All right, and so that is why we have come to the figure of $1,300. Let's go to question item 46. Item 46 indicates that the main reason why sole proprietor may consider joining with one or more persons to form a partnership is, and we're concluding D to be the appropriate answer, the business would get additional capital and management skills. Item 47. Item 47 says Mrs. Lois invested $20,000. Mrs. Monroe invested $5,000, and Mr. Nathan, right? Sorry, invested $5,000 in the same business. We're told that the loss sustained during the year was $1,000. The partnership agreement is silent on the items of losses, although profits are to be split, yes, in the ratio of 2 to 2 to 1 in favor of Lois, Monroe, and Nathan, respectively. How much of the loss must be borne by Mr. Nathan? So it would be then that the ratio of 2 to 2 to 1, so Lois will get 2/5, and Monroe will get 2/5, and Nathan will get 1/5. So we're going to find 1/5 of $1,000, and the answer is A, 200. Question 48. A businessman incurred the following expenses, and it is listed here. What is the total capital expenditure? All right, so it would have been the new machine and the new vehicle, $10,000. Answer is D, $10,000. Item 49. Item 49 says, which of the following ratio are used to analyze the financial position of a partnership company? Yes, financial. So what is used to analyze the financial position? We are agreeing that it is A, 1 and 2, current ratio and acid test ratio. Item 50. A business with more than one owner, yes, records the division of profit in which of the following account? Our answer is C, an appropriation account. Item 51. Item 51 is telling us that which of the following accounts best describe the final accounts of a non-trading organization. Our response is A, 1 and 2, receipt and payment and income and expenditure. Item 52, the reward of profit received by a shareholder in a limited company is called, and our answer is C, dividend. All right, so item 53. So our answer for item 53, let's look at the workout now. So this is it. The receipt and payment, we put in the opening balance. And so the answer would be $1,600. So we would put in the monies that we would have received, the opening balance, subtracting from what we'd have paid out, and we got $1,600. So when we go to the question now, we'll see answer is B. B is the appropriate answer for item 53. Item 54 says that a company earned a net profit of $60,000 for the year ended 30th of September 2015. Proposed dividends were ordinary shareholders 10,000, preference share 15. The company decided to transfer $8,000 to a general reserve. The retained earnings on the 30th of September 2015 was, and let's find that out now. So the answer to that would have been A, $27,000. How do we come to $27,000? All right, so the dividends of total would be 10,000 plus 15. That is going to give us 25,000. 25,000 plus the 8,000. Yes, it's going to be 33,000. Take 33,000 from the 60,000. We're left with 27,000. All right, let's go to the next question. Item 55. Item 55 says the trading and profit and loss account is used when a cooperative, let me read that question again. The trading and profit and loss account is used when a cooperative is, and our answer is D, buying and selling. And we have item 56 says a business received $5,000 for rent revenue and deposit this amount into the bank. How will this transaction be recorded? Our response for item 56 is B. We're going to debit the bank account and credit the rent revenue of $5,000. Item 57 gives us a question relating to manufacturing. Prime cost, overhead, work in progress, opening and closing. What is the year's cost of production for finished goods? What should we do? We're going to add the prime cost with the overhead, which is going to give us $26,000. We'll add the opening progress, 26 plus 3 is going to give us what? 29,000. We subtract 5,000 from it, and our answer is going to be 24,000. So D would be the appropriate answer, 24,000. Let's move on. 58. P. Hawk has a manufacturing business. The cost of his raw material was $1,900. Rates and rent total $2,000, and factory wages amounted to $2,500. What is the unit produced? The unit produced was 640, and they want to know what was the cost of one unit. So we will add the 1,900 plus the 200 plus the 200 at 2,500, and we divide that sum by the 640, and our answer is C, 10 units. Item 59 says that Q-Brain is employed by a construction company at a rate of $7 per hour. During the week of 6th of April 2015, he worked his basic week of 40 hours. The income tax due on his pay is $20, and he is also liable to pay Social Security contributions of 5% of his gross pay. Now they want to know what's the net pay of Q-Brain. Now, the best answer for it is A, 246. How did we come by that? All right, so if he has a rate of $7 per hour, he is going to be multiplying the $7 times the 40, right? And then you're going to subtract the income tax of $20, and of course the 5%. You're going to be finding the 5% and subtract it from that total, and our answer is 246. All right, we're now at item 60. Item 60 refers to the following information: net pay, income tax, and national insurance. What is the gross pay of V. Jones? What is the gross pay? All right, what we simply are going to do is to go backwards, yes? We're going to add all of that information, and that will give us the gross pay, because the income tax and the insurance would be deductibles from the gross pay, yes, to give us the net pay. So we add back all of that, which is going to be 1,550. D is going to be the appropriate answer. All right. Thank you very much for sharing. Hope this process was helpful and that it has contributed much more to your understanding of these questions. Please like and share this video and click that subscribe button. You will see when we shall upload another lesson. Thank you very much.